This chart shows the total liabilities of the top 6 Ethereum treasury companies. Despite their aggressive buying, their total debt has actually declined since the start of 2025, falling from $225 million to $190 million. That, of course, doesn't mean every single company has reduced its debt. When we break it down, firms like BitDigital and GameSquare have seen their liabilities rise, but those have been more than offset by debt reductions from the other 4 companies. Now, with what the US central bank is doing, it's going to enable these treasury companies to gain access to cheaper capital, giving them the flexibility to expand their balance sheets again and buy even more Ethereum through leverage. This chart shows the Fed funds rate, which is the benchmark interest rate set by the Federal Reserve that directly influences the cost of borrowing. Falling rates means cheaper borrowing, pushing capital toward risk assets like crypto. And the opposite is also true. We can see this more clearly by putting Ethereum's price on top. Ethereum bottomed and moved higher from December 2018 onwards, right as the Fed announced a rate pause and then moved towards rate cuts. It then peaked in November 2021 when the central bank began raising rates again. And once again, it found a bottom in late 2022 as the Fed signaled that rate hikes were nearing an end. Today, we're once again in an easing cycle. The Fed has already cut rates by 0.5% in the past 2 months, and markets are anticipating one more cut before the end of 2025. This provides the ideal backdrop for Ethereum treasury companies to take on more debt at a cheaper cost to fund their buying operations, one that could easily neutralize all the selling coming from long-term Ethereum holders. Of course, at some point, the tide will turn, as history reminds us that every period of easy money eventually runs its course. The leverage built during times of cheap borrowing always comes with a cost. When that shift happens, the same Ethereum treasury companies driving demand today could become a source of systemic risk, as rising rates with maturing debt forces them to sell their positions. The more leverage they take on in this easy money environment, the greater that risk becomes when conditions reverse. We think that moment will eventually come, but we don't believe we're there yet. For now, this wave of cheaper money continues to act as a tailwind for Ethereum. In the past year alone, we've captured multiple double-digit trades on Ethereum, with gains like 28%, 37%, and even 83%. And for the trades that didn't play out, our losses were limited to around 5%. We also completely sidestepped the recent crypto liquidations, as our risk management framework triggered a sell signal ahead of the event. To follow our exact trading strategy step by step, with real-time buy alerts, sell signals, and portfolio updates, join our community using the link in the description below.